Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen. So in this video, we're going to go ahead and talk about some things in regards to Opendoor. I've been a critic of this company, but I have given some positive attributes to it in regards to a potential Q2 2025 guidance that has a positive adjusted EBITDA at a break-even zone, which is approaching. However, given the weekly trading that I have seen for Open, I have to, given our data-driven first principles approach, I have to go ahead and talk, about what I've been seeing. So hi, what's going on, everybody? Yeah, that'll be so funny. What's going on, Buddha Bud? Yes, so I'm glad you joined us. You know, what I like to do when I think of data-driven is, think of an academic center and you're pretty much talking to your patient, right? And you're telling them the risks and benefits of a procedure, right? This is exactly the same thing here, right? We're just looking at the risks and benefits. There's no bashing. At the end of the day, even if you provide logic out there in the void, dopamine is one hell of a drug. And even then, if the stock was to just go up when it's not tied to fundamentals, people don't care, right? Look at the .com, right? But then obviously there was a crash at the end, right? So with that, let's go ahead and talk about what happened this week, because this week was pretty insane. So today, Open is up 36%. 5 days, it's up 188%. In a month, it's up 324%. Now, if you go ahead and look at the bottom at 51 cents, Open is up 341.18%. Now, the question is, the next logical question is why? What happened? What is this? Is this what kind of increase is this? Is this a fundamental intrinsic value increase, or is this something else? And it's very clear that it's something else, right? Let me go ahead and just see if I can pull up our sentiment analysis here. Let's take a look at their software here. Curious to see here. So it'll take some time for it to upload here, but then, all right. So we'll take a look at that. And then let me just go ahead. I have another screen here, so I'm just taking a look-sees here. All right, good. So given this, we want to take a look at the volume, because the volume has been pretty impressive, right? If you look at the week and analyze the weekly volume of what happened, you could see the volume this week was about 1.7 billion shares traded as a total. 6,822,094. Right? Does that sound right? 1.7 billion. 113,594,400. And last week it was around 624 million. So today the volume was by itself 589 million. So there's a lot going on here. And the last time we've seen this kind of volume was never, right? We've never seen volume like this in the history of Opendoor, right? In the history of the inception of Opendoor, we have never seen this type of volume, okay? So when it comes, again, guys, when it comes to my research, I'm very unbiased. I say exactly what I'm just reading the data, right? So everything that I show is reading the data. And, me saying this is the highest volume I've ever seen, maybe you like that data. But then when I go ahead and show you institutions are selling, people don't like that data. So it's like selective hearing, and you really got to check your internal biases, right? Because then you're going to lose a lot of money, right? So given this, there has been a change in volume. Now, the question is, are these institutions or are these retail investors? Again, lots to decipher. And the unfortunate part is the SEC 13F filings happen every 3 months. The next SEC filings won't tell us, right? But the next one, so within 6 months, we'll figure out if institutions have loaded the boat. Now, I personally think algo trading, I think that, I think institutions have loaded some because this is just the way it's just algo, right? It's how algo investing works, right? But what I find interesting is in a short period of time, within literally, weeks, we've went from oversold to overbought territory. So again, it's a bit scary to get in on this because there hasn't yet been a business turnaround, potentially positive EBITDA next quarter, but still unprofitable. In fact, so we'll talk about this to see, but we'll let me just go ahead and I want to open this up here so I can, I have my I have the data here so we can reference the data. All right, so with that said, for folks that don't know, you can follow me at @ Albert Allen or at the Al Stock Trades, right? This is where I put the research here, right? And we'll definitely give us a follow if you haven't done so. Likewise, we do have our coupon code SAS, which gives you $1,200 off. Lots of individuals have joined. Only if you have integrated. So please integrate because you get access to the stock terminal on the Discord as well, and also lifetime access to all of our data. And as you can see, we have over 2.5 billion outputs of institutionally graded data. We have individuals who've gone from 50 to 70,000 to becoming millionaires. At the end of the day, the platform works. Our total combined net worth from a 30% response rate is $45 million. So this platform is the real deal. And there's no emotions here. There's no hiding of truth, which unfortunately you'll find. So based off of this, let's go ahead and be data driven. And let me pull up a couple of things here. So I'm going to pull this up here. This is a good thing to talk about. Okay. All right. So first things first, you have Context Capital Management sold 44 million shares of Opendoor Technologies, reducing their ownership to zero. So that's about 44 million shares sold from this large management company. Okay. So that's hit number one, right? And again, a lot of investors that are in open, they don't like this data and they're arguing with data. Again, I'm not against you guys, right? Someone says it's going to be hard for you, but it's probably going to resume up. I don't understand why it would be hard for me for a stock to go up, right? Again, I have no active short position. I don't short stocks, right? I don't even encourage that in the lifetime access financial literacy platform that we have. I'm just basically posting factual data, and people are killing the messenger here. And I'm even having physicians telling me not to just to focus on Clove, right? And again, it's about risk and benefit. Think of when you talk to your patients, right? You don't just tell them all the good things that can happen with the procedure. You tell them the bad, right? Because they deserve that, right? And that's all I'm doing right now is I'm just saying, here are the good. We have volume that we've never seen before. In the history of Opendoor, I've never seen volume like this. This volume is insane, right? We're talking about positive EBITDA potentially in a break-even zone in Q2 2025. We're giving all the good, right? And we're going to talk about the short data. We're going to use short data here. We're talking about all the good, and we're going to also talk about the bad, right? And if you want to ignore the bad, then, honestly, you don't want to be in a group of all fun, happy, pep rally investors. You want to be in a place that looks at the inverse. Even in our platform of how bullish I am in Clover, in our platform, we talk about the negatives because we want to know when we should realize the negatives have come, so we are more intelligent than the average investor. The unfortunate part is people don't work that way. It's more of a tribal pattern, right? I'm even trying to help someone with this. And what I did is I took their conversation and I pasted my conversation and their conversation on X, Twitter X, and I put it through ChatGPT. And I'm like, listen, man, this is how ChatGPT looks at you. So here's me and here's the person. And I'm like, Albert presents himself as data-driven, rational investor focused on objective analysis over sentiment. He values transparent, research-backed communication and appears unbothered by emotional pushback, choosing instead to reinforce his position with filings, evidence, and logic. Then you have the typical retail investor, reacts defensively to perceived negativity around her investment, right? Taking a tribal stance in favor of Oscar. Now, again, look what happened to AMC. Look at all those tribal investors, right? Again, if you act like this amongst all your investments, there's going to be one that's going to nick you in the ass, right? And it's really going to take you out. And that's the whole thing that I'm just saying. I'm just saying, let's talk about the good and let's also talk about the bad. And if you don't want to talk about the bad, then, it's like going on a plane and saying, I'm just going to fly and I don't care. I don't think there's going to be mountains. Even if the GPS is telling me that there's mountains, I don't care because other people are flying with me. And again, time after time again, the people that are successful in the stock market are usually contrarian investors that are against the grain. Okay. So again, they challenge the critique against Open. Her response are more emotionally charged than loyalty driven, defending her stock and accusing others of distraction or misinformation. I mean, I don't understand how filings can be misinformation. Again, the guys, this is a weakness. Our channel is I'm a scientist, right? Our channel is to basically edge at the truth, right? And regardless if it hurts, the truth hurts. The truth hurts, right? And it's unfortunate. It is what it is. But at the end of the day, if I'm going to be going down in history in terms of you guys watching and all the lifetime access members, I want you to always say, you know what, man, that guy has always been truthful. He's been honest and he's never lied to us. And that's the type of brand that I'm building, right? Regardless whether you don't like it or not, right? At the end of the day, it's fine. I can be hated by a bunch of pep rally folks, but at the end of the day, I'm giving you what I know of over 14 years of information. Okay. All right. So with that, we have so this is kind of the core of our platform, right? We want to be able to help the retail investor, right? What I found interesting is I did some digging into Mr. Eric Jackson. And I'm going to go ahead, and these are the SEC filings. These are legal documents for Mr. Jackson here. And you can see that he bought Open in 2021, sold it in 2021, bought Open again in 2022, sold it in 2022, bought it again in 2022, and then sold it in 2022. And so now we're going to analyze, has he been successful trading Open? Okay, so now let's go ahead and read this post, okay? So I said that something doesn't add up. You know what I find interesting? There's a gentleman named Eric Jackson, founder of EMJ Capital, who's been pretty vocal about his beliefs that Opendoor could reach $82, okay, per share. So someone says swing trading. Okay, so let's analyze. Has he been profitable in his swing trades? Let's use first principles analysis and go ahead and dig deeper, okay? So let's break it down, right? So let's see how he's been swing trading it. So that's your answer? Let's investigate. In September 30, 2021, EMJ bought 62,000 shares of Opendoor at an average price of $16.73. In December 31st, 2021, just 3 months later, they sold 62,000 shares, all their shares, at around $14.61, locking in a 12.67% loss. That's a negative. Okay, swing trade negative. Okay, but then it gets more interesting. Then in March 31st, 2022, EMJ bought 135,000 shares at an average price of $9.69. June 20, 2022, again, just 3 months later, they sold everything when the stock was around $5.66, taking in a 41.58% loss. So now you're saying tax loss harvesting. Okay, so so essentially he bought and sold, lost 12%, and then he went ahead and he bought again and again lost. He bought it at $9.69, sold at $5.66, and he took a 41.58% loss. So then now you're going from swing trading to tax loss harvesting. Okay, so let's continue then, right? And then it doesn't stop there. In September 30, 2022, they came back in buying 70,000 shares at $4.74. December 31st, 2022, again, sold all shares at just $1.16, down 75.58% from the buy-in. So then he locks in a 75.53% gain after locking in a 41.58% loss. Sorry, my fault. I said gain. Let me say that again. September 30, he bought 70,000 shares at $4.74. December 31st, he sold at $1.16, locking a negative 75.53% loss. So he went from a 12.67% loss to a 41.58% loss to a 75.53% loss. Now, again, if you think this is bashing, I don't understand what bashing is. All I'm basically telling you is what's happening. I'm just a messenger showing you the filing data. That's all I'm doing. Is I'm showing you the filing data. And if you think that presenting legal documents from the government and the SEC 13F is considered bashing, then you're an emotionally charged investor. This is not bashing. All I'm doing is reporting lab values, right? Patient has a lab value, white blood cell count trending normally at around 7. Hemoglobin is basically 12 to 15. Creatinine levels, I'm just basically reporting that. And if, let's say, for example, the creatinine level goes up to 3 or 4, potassium goes to 6 and 7, you're telling me that's going to be bashing? Oh, because the lab values are not going in the right direction? Come on, man, right? Let's be first principles and let's use the cephalization of our frontal lobe and think from an engineering perspective. Okay? Because not a lot of people can think this way. And that's the whole goal of our platform. Regardless if a stock price goes up, right? What did Warren Buffett say? He said, I don't care if the stock price goes up. At the end of the day, I have a batting range, right? Because it's not the sum of one stock. It's a summation of multiple hits that you take, right? You don't have to hit every time. But if you're a baseball player and your batting average and you analyze, let me see if I can find it, right? Baseball average hit range. Again, I'm not a baseball player, but there's like a graph that they have, right? And this is when I first learned about stock market. Here, let me ask GPT because I don't know the name of this, right? So you know how in baseball they go ahead and analyze a graph where the person is able to hit. What's that graph called? Like their hitting ratio? What is it called? It's a spray chart. That's what it's called. Okay. So at the end of the day, you have to analyze your sprays chart in baseball, right? I could have sworn it's something, it looks a lot better than this, but you have to analyze your hit ratio, right? I'm going to hit what I'm comfortable at. If I get a side, I don't have to take the hit, regardless if it goes up or not, right? Because at the end of the day, if I do something that I'm not comfortable with and I lose my money, it's my fault, right? The government's not going to step in, right? All right. So then now so now let's analyze this. So basically, this gentleman locked in a 12.67% loss after a 41.58% loss. Then on top of it, locked in another 75.53% loss. So then now let's go ahead and let's ask this question. So here's the big question. If someone truly believed in Opendoor and it was an asymmetrical opportunity, then, that could moon to $82. Then why at such a massive loss repeatedly, right? We're not here to throw shade. We respect Eric Jackson and anyone who puts their ideas out there, right? But as an educational platform focused on financial literacy, through first principles thinking, we encourage everyone to be data-driven. Let's not speculate. We follow the filings, right? Personally, I'm curious to see if EMJ's next 13F will be there. What's going to be in there, right? Did he buy Opendoor? I'm not assuming. I'm not saying he's pumping. I'm not doing that, right? Because that's disrespectful to Eric Jackson, right? I'm only following the data, right? In 3 months from now, we're going to see, did he buy back in? Because right now he's not a shareholder based on the 13Fs, but most likely given his post, maybe he bought it. Again, I don't know. That's speculation, right? So I'm going to basically go back to the filings. I'm going to go back to the data because I'm data-driven. I'm a data-driven investor, right? It's all about data. There's no opinions here. There's no tribal, right? What happened to the AMC tribe, right? Where are they now, right? You want to go ahead and see where they are? Let's go ahead and open this up. And let's go ahead and go to trades. Okay, let's go ahead and do that. Let's activate this. This guy is like how I lost 2 million and left YouTube. Let's go ahead and let's see. Did he delete the video where he's talking about AMC? He had a couple of it. No, he's been making a lot of videos lately. He made a video about AMC's exit strategy. Okay, so now let's go ahead and see what tribal mentality has basically. What is the outcome of tribal mentality? So let's go ahead and look at the new filings, and then literally became homeless. I'll be damned. Anybody thinking about getting back in? All-time lows. This video hits differently. Now he said he lost his money, especially after 70% lottery statistics. So I thought this was proven, right? Now people are realizing it's a lottery. But let's go back longer before he came back to YouTube, right? 3 years later, still no squeeze. Miss having you. Okay, people are missing him. So there were times, there it is, POS, scammer, FU, right? So think about it, right? It's funny because, you know, you have retail investors, right? If I was to go to this idiot called Mendito and I would have told him 3 years ago AMC was hot trash, right? He would come at me and tell me and insult every little orifice of my body, right? But then now he lost his money. He cries victim and blames someone as a scammer, right? Because he cannot take, he can't look in the mirror and he can't say, you know what, maybe it's a little bit my fault. He blames someone else, right? So up in the rally, he was basically ignoring all data, but then, now he plays like a little victim, little B, BITCH. Okay. All right. Now let's go ahead and continue. What else? He deleted all his videos, people calling him con artist. Again, the whole script gets flipped. Okay. Now again, I'm not saying that this is going to happen for Opendoor. I'm not saying that, but all I'm saying is at the end of the day, if you do decide to follow someone else and not question, right? Remember Socrates, if you even know who that person is, a life not examined is not a life worth living, right? You want to be able to think for yourself, because when you're down on the ground and when there's no one there, you will be alone. You will be by yourself. How do I know that? I was homeless. I slept in alleyways. I ate through freaking dumpsters, and now I'm a multimillionaire. No one was there when I was at my bottom. The government did not care about me. The government did not give a shit about me, right? I had to crawl my way out of poverty. When you're at rock bottom and when you lose everything, no one gives a shit about you. And this is well documented if you want to know who I am. For folks that are tuning in that are new, okay? This is who I am, right? They're formerly homeless. UA is the one step closer to his dream. I came from nothing. I came from the streets as a homeless teen. I started from zero, right? And I can tell you, when you're at rock bottom, no one gives a shit about you. No woman looks at you. Nobody respects you. People look at you as a scum of the earth, even if it's not your fault, right? So think for yourself, because these people that try to act like they're your friends, in the end, when all shit hits the fan, the only person that's going to help you is the God-given brain that he installed in your mind, and you have to use it like a muscle. Learn how to use it. Learn how to think for yourself. Look at the positives. Look at the negatives, right? Posting SEC 13F filings is not considered bashing. It is data-driven approach. Okay, so then now we went ahead and talked about this, and we went ahead and looked at this data-driven approach. And also, why are institutions, why have they been selling? Because they're anticipating a reverse stock split. Now here's the thing. Given that we've had volume that we've never seen before, could this volume indicate that the algos and institutions are back online saying, hey, man, I don't think there's going to be a reverse stock split anymore? That could happen. And then maybe it gives them time not to do a reverse stock split, which basically stimulates an automatic insider buy in a way, given what he was been doing, even though there has been no insider buying, right? That may potentially push them to profitability and give them enough time. The question is, though, can management capitalize? That's been my consistent message. All right. So then now let's go ahead. We talked about this graph right now. And then we went ahead and talked about even BlackRock. BlackRock sold 34.9 million potentially for rebalancing. That's a 74.28% reduction. So that's over 80 million shares sold, right? And I get it. The argument is it's already been absorbed. But the thing is, who absorbed it? Retail investors? Do you really want to surround yourself with dumb money retail investors, or do you want to surround yourself with smart money? Again, you got to look at these things and you got to base it on facts and intrinsic value, right? Because that's how I made my millions, right? There's many ways to skin a cat, but again, it's all about the batting average. It's all about your spray chart, right? At the end of the day, yes, you can make a couple money here, but in the long run, once you do, let's say, for example, turn 10,000 to a million, let's say, but then you basically go ahead and continue gambling, you're going to lose that, right? And then you're going to have to most likely pay taxes. Who knows, right? So you got to know what you're comfortable with. But unfortunately, most people are not data driven, right? And that's what and that's fine. I can be attacked. I can be the bad guy because I know that in the beginning, as what Charlie Munger said, the stock market is a voting machine. It's all about a popularity contest. But in the long run, it's a weighing machine, right? Where fundamentals and real value actually start putting weight into the vote. So this is basically showing you that BlackRock reduced their position by 74.28% from 47 million to 12 million. You have Context Capital Management reducing their position from 44 million shares down to 0, right? And then here's EMJ Capital portfolio, only 3 positions right now at 3.1 million, right? $3.1 million. He has these investments here with Coin, Enphase, and Frey, right? And that's his top increases this quarter, what it seems like. Again, tough to see here. These are top decreases this quarter. And Open, it looks like he completely sold out in Open, which we basically talked about, right? So there's that, right? So question is, who is Al? My name is Al Stock Trades. I went from homelessness to becoming a multimillionaire. I created a platform that has over 2.5 billion outputs of institutionally graded data. The platform here, you can find it at alstocktrades.com, coupon code SAS. Likewise, if you go ahead and let me go ahead and give you this article so you know more about me. The platform I created has helped many retail investors go from 0 to 1. In fact, we have created a platform that is in 44 countries, dominating over 60 stock markets. Likewise, the members with a 30% response rate survey have generated a net worth of approximately $45 million, right? So that's who I am, right? And I'm in training to become a medical doctor. All right, so now that we know who I am, let's continue basically going forward. So what I find interesting, though, is look at this screenshot, right? Look at the screenshot. Eric Jackson was now as bullish on Open, but yet on July 4th in 2025, he says that Open is still in the doghouse for now. You know, so this guy was asking, hey, are you interested in, Open? And he's like, it's in the doghouse now. So what's changed in 18 days? What's changed? What has fundamentally changed in the company? Have they released anything? The answer is no. The only thing that changed is that there was a voting that was scheduled to happen, I believe on the 28th of July, regarding the reverse stock split. And this gentleman was basically trying to avoid that. Potentially, again, this is speculation. This is my opinion. I'm about to give you my opinion now for the first time in the video. Now I'm going to give you my opinion, okay? My opinion is, I think that he purchased Opendoor at around maybe 60, 70 cents, I think. He purchased Opendoor around that. And I think with this reverse stock split, it is probably going to push it down to 10, 20, 30 cents. Who knows? And he was like, I can't lose this, man. This is going to go really bad. So then he went to media, and then he basically was able to successfully create demand. I think that's what happened. But again, that's my opinion. Everything else I told you was fact. This is my opinion. This is speculation. Think of this as the last 10 seconds of what I just said. Think of it as hot diarrhea trash, because that's my opinion. What I just said was trash because I can't back it up by data. I'm only just backing it up by my opinion, which is nothing in Wall Street. My opinion won't get $1. You understand what I'm saying? So this is how you should think, right? You should think like this. You should know between opinion and fact, okay? All right. And sometimes a fact may not be a fact. You have to have multiple facts in that same fact to qualify to flip your threshold to say this is definitely fact. You understand what I'm saying? Like a scientist. Many experiments formulating the same outcome. Okay, then this is no longer a hypothesis. This is a theory. Okay, good. So then now, and a lot of people don't have formal training as a scientist. I have over 10 years. Okay, so now that we went and talked about this, I just find it interesting how we just went from July 4th not being bullish to being bullish. And the only delta change I see is the reverse stock split vote supposed to be scheduled on July 28th. Interesting. All right. We could go ahead and talk about the short data here. The big thing here is I want to look at the Algo. Again, for folks that don't understand, if you go to Algo Flow or Flow Algo, you could go ahead and pay about $100 a month. It takes $37 for 2 weeks, and afterwards it's $99 a month when you pay annually. So you would have to pay $1,200 a year to get access to this data. But yet, again, with our platform, given we have agreements and third-party deals, you get access to Algo Flow lifetime access and everything that we offer by using the coupon code SAS for $1,200 off lifetime access one-time payment. So what does Algo Flow tell us? So let's see what it thinks Open is going to be, in terms of data-driven analysis here. So let's see. So based on this, it looks like Algo Flow did basically go down. We had some consolidation in the stock, but now Algo Flow is flowing up, which means that Algo Flow and options is showing that this stock is going to go higher, right? But the thing is, you have to ask yourself, and you have to divide. It's like having pain. What kind of pain, right? And you have to divide that pain. Is it sharp pain, dull pain, diffuse pain? So let's basically see, why is the stock going up? Is the stock going up because of the fundamentals, or is the stock going up because of hype? And you have to understand that as those differences, because, especially, you just by understanding that, you know what is going to be sustainable and what's not, right? Because who knows? Earnings is on August 5th. What happens if they report earnings and they're down 30, 40%? Again, we don't know, right? Earnings is August 5th. All right. You know how they say trade the news and all this other stuff? You have day traders in this now, right? So you got to be careful, right? And we don't know if institutions came in online. We need to look at the next the two SEC 13F filings, right? So I hope that you're seeing. I recommend watching the video again and watching my other videos I have on Opendoor. So look at go to YouTube, search my videos. I had multiple videos on Opendoor, right? You can look at them and everything, and you can see I have a multi-million-dollar portfolio. I have a publicly traded portfolio that I'm showcasing, and you're going to see how it goes from 1 million to potentially 10 to 50 million in the next 10 to 15 years, right? All right, so there it is, right? And again, you're not going to find something like this online, because at the end of the day, people like to lie. People like to lie, cheat, and steal, and that's not what I like to do, because I don't need to do that. I'm gonna be a freaking doctor. I don't need to do any of this, right? I'm doing this because I'm passionate for the retail investor, because I've been cooked and I've been screwed by life so many times, especially where I came from, and I got tired of the little guy losing. I want the normal Main Street investor, the normal person who's in the bottom 50%. I want them to work, right? I want them to win. I don't want them to work. I want them to win. Right? That's it. So based off of this, it looks like from the algo flow perspective, it looks like Open does have the potential of going higher. In fact, the market cap now is higher than Clover, right? So let's go ahead and look at 3 right now. But it's not being driven by intrinsic values. You can see algo flow is suggesting we're going to go up even more. Okay. So there it is. And also the other positive thing, because again, you got the volume is insane, right? The other positive thing that we should talk about also is the potential Q2 2025 guidance of positive EBITDA, right? So there's that. Okay. Now let's go ahead and look at Ortex, right? Let's go ahead and analyze that, okay? So give me a couple seconds, let it load. All right, so interesting. Look at the short interest. Short interest actually, so let's look at the past 7 days. Are shorts covering? No, they're not. No, they are not. Shorts have increased their short position by 17%. Utilization has increased to 12%. Short score is up now. So you know what this means? The shorts are actually doubling down. They're increasing their shorting. In fact, let's go ahead and increase. Let's zoom in. Interesting. So the shorts back down, and then now they're pulsatile. So they're doing a pulsatile short. Okay, listen, guys. This is showing me that the shorts are coming back online here. So this potentially could be a short squeeze candidate, but I think what the shorts are hoping for is a bad Q2, and then potentially winning on that. But based off of this, they're doubling down, because if you look at yesterday, I'm going to be posting this tomorrow, right? I'm going to be posting this tomorrow, but the shorts have went from 19%. If you look at my video, listen, guys, I made a video 3 days ago about Opendoor, right? And the short interest was around 19%. I have like photographic memory. I clearly remember it was 19%. That mother effer was 19%. Okay. And now it's 23%. So I'm telling you, this has the potential of short squeezing. Okay. But here's the problem. Okay. As an investor, are you invested in the long term of it? Okay, great. In terms of the fundamentals, but are you invested in short squeeze? You got to be careful, right? Remember, this guy from EMJ Capital is saying that this is potentially an $82 stock. If it's clearly an $82 stock, then why was he selling? Why was he selling? Because remember, I first got in at Clover at around $6, $7, right? I put in around maybe $40,000-$50,000, right? And then as Clover kept going down, I didn't sell. I bought more. Right? Now I have over 330,000 shares, right? I bought more in Clover because I know the price target is a lot higher. I know the intrinsic value is a lot higher. What I'm fearful of is that this guy is saying it's $82. Then why is he selling? Why did he sell at $4? Why did he sell at $9? right? Why is he selling, right? So that's what you have to ask. Again, you got to look at the good and you have to look at the bad. Okay? Your feed is blacked out. Can only hear audio. Let me see. Can you guys hear me? Comment down, guys, if you guys can hear me. Let me go ahead and just look at the channel here. I mean, I can see it, guys. I don't know. I can see it, right? I can see your screen. The guy's pumping his bag while selling. Again, eyes are beautiful. I can't say those things, right? Because I don't have the data to show you that, right? Again, I like to be data driven, and I want to give the benefit of the doubt for Eric Jackson. Is he doing that or is he not, right? Again, I don't know. I'm data driven, but you guys can come to your own conclusion. You guys can take the data and formulate your own opinion. And that's the whole goal of, as you could call me, I guess, a scientist teacher, right? You can see your screen. Excellent. Okay. So you guys can see, right? So the question is why is he selling when he thinks that the stock is going to be $82? Because you got to look at the person's past, right? Let me do some teaching. Steve Jobs about connecting the dots. Steve Jobs, God bless his heart, he gave a commencement speech and he said that, let me do some teaching. He said this. He said, you cannot connect the dots looking forward. You can only connect them looking backwards. So you have to trust the dots will be connecting your future. That's commencement bullshit. Let's go ahead and read from you and backwards. You cannot connect the dots looking forward. You can only connect them looking backwards. So let's go ahead and connect the dots looking backwards. So if we look backwards to Eric Jackson, he's been selling at he's been selling at like $9, $4, right? So that's weird, right? If someone truly, thought this was an $82 stock, then why would he sell, right? Again, like for me, I didn't sell, right? Because I knew the value of the company. I bought more. Now, maybe he was just doing tax loss harvesting, but again, listen, guys, I didn't do that, right? And again, do different investments, right? But I didn't do that, right? I bought more. In fact, I increased my holdings. I bought more. I have more shares in Clover than he has ever had in the history of him buying Open. That's number one, right? And let me think here. And I'm not backed by anyone, right? I'm backed by God, right? And if you look at by his portfolio, my portfolio, especially the larger one, is bigger than his, right? Again, I'm not saying I'm better than this person, right? He probably has more cash on the sidelines. All I'm basically saying right now is that why didn't he double down, right? Again, I cannot make any other arguments outside of what he's saying, but I can only speak on the data. That's all that's all I can do. I'm just interested why he went from being negative to positive, and the only change was a reverse stock split. But what I find interesting is this is a short squeeze candidate now. This has a high probability of short squeezing, okay? And you can already see it happening, okay? So now that and again, people are invested in this not for the future. They're invested to make money. They don't give a shit about the future of Opendoor, right? People that are coming online right now are wanting the squeeze. So based on this, let's go ahead and remove this and let's look at the history. So, Open has never seen shorts this much. So shorts are doubling down. If you want this to short squeeze, and this is what he's kind of gunning for, if an insider buys, this thing is going to take off. If somehow they're profitable or free cash flow positive in next quarter, this thing's going to take off, right? But the thing is, it's already taken off a lot. And you could risk putting, let's say, for example, I'm not putting money into this, but if I put, let's say if I put $100,000, right? And after earnings, this thing falls by half, right? I just lost 50 grand. That means the stock would have to double again in order for me to get that, right? If 50% loss is equivalent, so you have to get 100% gain. Most people don't understand that, right? Most people don't understand that math, right? If you do a 50% loss, a 50% gain won't get you back. 100% gain will, right? Because if you go to $4 to $2, right, that's a 50% loss. But to go back to $2 to $4, that's 100% gain. That's a double your money. You understand what I'm saying? Most people don't understand that because they don't have any aspects of risk management. Okay, so I've actually already did that. You can find this on the video I made 2-3 days ago regarding Tempest AI. I actually made a video about that. So you can look at that. And to answer your question in 1 to 2 sentences, Tempest AI is focused more on the diagnosis of oncological cancers, et cetera, rather than actually what Clover's doing, which is going into the community for family doctors and helping with bread and butter cases such as type 2 diabetes, A1C, stabilization, and A1C decrease and early detection of chronic diabetes, and also chronic kidney disease, stage 3K, stage 3A and B, stabilization of glomerular filtration rate, and decreased hospitalizations and decreased readmission rate. So those are the 2 different endpoints. And the difference is Clover has a proven over 1,000 basis points medical cost ratio decrease. And now with these subdomains with Humana and Molina, it's suggesting something. And we'll talk more about it soon. So there's my kind of 2 cents about that. As you can see how comfortable I am just answering the question very quickly, because I've done my due diligence. I do the hard work, right? And then I have other stocks where I've done the hard work, and we do a deep dive on them, and we go ahead and release it to our lifetime access members. So if you're out there and if you want a no BS platform and surround yourself by individuals that have a total net worth of more than $45 million, access to over 2.5 billion outputs of institutionally graded data. Even institutions now are buying lifetime access at the institutional price of $25,000. You want to surround yourself in an elite group that's just not just a stupid group where everyone basically holds their dick. No, this is a group that has access to data, has access to high-end institutionally graded data, the type of data you will find at Wall Street. This is exactly what we provide. And we provide an educational platform that'll take you from zero to hero. Because I can go ahead and toss numbers at you all day. If we don't teach you how to interpret the data from our educational platform, because we are an educational platform first with an infusion of data, this is how we take you from zero to hero. Okay? All right. Now, let me go and answer the questions here. Oh, you're reloaded. You can see me now. Good. Good. We'd answer this. If your swing trading is a better to put. Yeah. So as you know, I have millions of dollars in Clover. I got a lot of money in Clover. My father-in-law has a lot of money in Clover. Definitely bought a lot of money in Clover. And what I'm happy about this is the fact that you're seeing Open up like this off of no fundamentals, and the fact that you see SoFi now up at $24 billion, literally just a couple days ago was at $22. The casino's turning back online. And what's happening is, if this is happening, just imagine what's going to happen with Clover. The casino will turn back on Clover. And you're going to look at the media, and you're going to look at these retail investors, and they're going to say, to the moon, like retards, right? To the moon, right? And it's okay. And you're going to look at them like, are these people like amnesic? Did they forget what happened? To the moon, right? And it's okay, because we're going to basically be selling them covered calls and cash secured puts, because these idiots are going to buy calls. Like, for example, if you look at his trades, give you an example. He bought a lot of calls, like he bought Open calls for 900,000 shares of Open, right? You're going to see a lot of call activity that it's going to happen. And what's going to happen for us is we're going to make a shit ton of money. And you're going to basically see, and I'm going to show folks on our lifetime access, I'm going to show folks how I do the wheel strategy, how I'm able to basically generate $200,000 to $700,000 every month. As of right now, I can showcase how to do $30,000 to $60,000 a month, but the stock is undervalued. And we've already shown that, and you guys have seen in lifetime access how I'm making $30,000 to $45,000 per month. And you've seen the bullshit that I was using. I kind of went on a little crazy. I got like $1,000 bottle of wine. I was just like effing around. I got $1,000 bottle of wine. I went to like some Michelin restaurants in Georgetown, and it was, and what's funny? It was the same restaurant that Bill Ackman goes to, which is really freaking hilarious. So yeah, I'm going to teach you guys exactly how these folks are able to retire, how to break out of the matrix. This is exactly the type of information we offer. We're an educational platform. We teach you how to do it yourself, right? That's the difference. Okay. So now let's go ahead to the data. Let me go ahead and look at this here. Yeah, that's insane, man. It's the price definitely got hit hard. Yeah, interest rates and et cetera. And if interest rates go down, then potentially, but again, it's tough. And they are transitioning their business, so there could be an opportunity. All I'm saying is we need to see it fundamentally. We need to see it, and it's just it's tough. And maybe Q2 may be that, but if they end up being EBITDA negative in Q3, then does really Q2 matter? Again, it's tough to say. That could be a potential possibility, right? Colbert report, right? That could be a potential possibility. Again, guys, listen, I'm not a prima bull or a prima bear. I'm just looking at the data, and I want all of us to have our conversation. This is a really good conversation, Colbert 99. That's maybe he sees something. Maybe there's something there, right? These are all important conversations, right? And so we made an intrinsic value of SoFi. We're going to make another video about that. So to be continued, we'll make a video soon. But if you look at my most recent video, we called out SoFi at $4, and we said the intrinsic value is around $15 to $25. And if I don't recall, let's just go ahead and look at an older video of just a very quick little tangent here, since we're here. You go here to search the videos. So here it is. Was it 1 year ago I made the video? Is it 1 year? I could have sworn I made another video, guys. Oh, wow. It's been that long? I really need to talk about SoFi. No, I made another video. No way. Yeah, I definitely made another. That's an old video. All right, hold on. Let me see. Yeah, this is an older video, guys. So yeah, here's $15 when it was trading around $4. This was back in January 24, 2024. So January 24, 2024. January 24. Where the hell is January? Yeah, so right around $7. And we also made older videos back 2-3 years ago when it was around $4. When it was trading up here, I was actually a bear, and I said this thing is going to go down, and people didn't listen to me, but obviously history proved itself. But let me go ahead and actually find the video that I spoke about it before. So give me a moment. Let me because it's actually interesting. We have a SoFi channel here. I don't know why it's not showing up, but let me find it. Here it is. There it is. Yeah, I made a video on April 16. Now, I don't know what's going on. So April 16, I made a video, and I said, smart money is lying, right? So Wall Street's lying. So this is what I said. I said Wall Street is lying. Let me remove your comment so you can see. Wall Street is lying about SoFi. Don't let them steal your shares. I'll show you proof. Now, let me show you something. This was April 16, 2025. April 16, 2025 was right here. It was right around when SoFi was $10. I've said, buy. Look at it now. Over 100% increase. Now, let's go ahead and see what I was showing you regarding the intrinsic value. You can see the data. You can see all these graphs, right? This is all part of our software. You can see all this graph, all these graphs, right? All of this. Look at all this. Look at all this data. All part of the lifetime stock terminal. Now, let's go ahead and look at the intrinsic value. So the intrinsic value, there it is. Look at this. See this? I'm going to take a screenshot so you can see. I'm going to take a screenshot. See the screenshot? And I'm going to go ahead and show you the price target. Now I have to redo it because, again, it's been a couple months. But look, I said this is a video for SoFi, right? This is our proprietary intrinsic value calculation. We've obviously made some upgrades since then. But look at the bull case. What is the bull case? $24. What was the price when we were talking about it? At $10. Obviously, we called it out when it was at $4.74. And we have documentation proof. You can basically find this on YouTube, and you can basically see we called it out at $4. But this is a reiteration because I was saying, hey, don't let them steal your shares. And at $10, I said, hey, the bull case is $24.93. Now, again, we've done it for Opendoor. Opendoor can be a 15, what do we say, $4 to $20 stock. But here's the problem. They need to be profitable, and they need to have free cash flow positivity, et cetera, et cetera. We'll talk about that later. But look at this. I said SoFi, $24.93. So you can see the data-driven investing that we're doing actually works because we're using the same software that hedge funds have, right? Because their data centers are integrated directly on Wall Street. Okay. So, so I hope, Marcus, you can see basically, and you can watch. I recommend watching this video. Just go ahead and type it here. Wall Street is lying about SoFi. Don't let them steal your shares, and I'll show you proof. Right? Al's platform is the best investment ever, and here's a lifetime access member. Right? So our platform works. Right? Again, guys, I'm not trying to bullshit you. Right? I don't need to do this. I'm going to be a medical doctor. I don't need to do this. I'm doing this because I have a passion and I want to help the little guy. I'm trying. Listen, guys, people that learn this information do not publicly go out there and show this information. Why? Because they want to keep it a secret. But you know what's stupid? We still use a constitution that's 250 freaking years old. Wall Street's not going to change. And you know what's funny? I can showcase this to idiots out there that are retail investors, and they would still, if it doesn't fit their narrative, they would still reject the intrinsic value software. Even if I've made millions of dollars, and you can see from my public portfolio, I've been very successful. I went from homelessness to a multimillionaire. That type of success is not evident if it's not been, you don't get that type of success without, something. And I'm telling you, this is the something that I'm using. I use the platform that I have created. I created this platform, right? Okay. So now that we went ahead and talked about this, let's go ahead, use our platform, and let's go ahead and look at Open. Like what we said, let's go ahead and pull the data. We go ahead and look at the hourly, go ahead and analyst price target. You can see we've just surpassed $1.75 price target. The goal now is, let's see what analysts are thinking. What are analysts going to say now? Are they going to start revising their prices upwards? What is going to happen, right? So this is something that we want to talk about, right? Now, let's go ahead and look at analyst estimates. Right. So if you look at the analyst estimates and look at the revenue high, by 2028, they're thinking the revenue for Opendoor will be $7.8 billion. Right. So let's go ahead and take a look at our software again. Let's open up the normal end of our software here, and let's open up a new tab. And again, lifetime access, right? One-time payment, lifetime access. Shout out to Klarna for international support for financing for folks out there. Okay, let's go ahead and take a look at the financial data and analytics metric software. We open this up. We open. That's kind of funny, right? And we go ahead and zoom in. And you can see right now the revenue went from 4 billion, 2.5 billion, 8 billion, 15 billion, 6 billion, 5 billion. They've been trying to cut the fat. Their profitability went from 600 million, negative 1.3 billion, 275 million, and went up a little bit, 392 million. But if you look at their Q1 right now, last year, Q1, 109 million, negative 85 million. Again, still weirdly, it's still unprofitable, but they're getting there, right? And Q2, we'll see. We'll see what happens, right? And then book value, obviously, the arithmetic mean book value decay went down to 51 cents when in reality it was around 89 cents to 80 cents. So it did present itself an asymmetrical opportunity because it was going into 2026 arithmetic mean book value decay. If you guys don't know what this means, we teach it on our educational platform. Okay. We have people that don't know how to invest. They come in and they come out champions. We have people that are experts that are, they come out, they're like, holy crap, I did not know what this was. I was fine. I was flying blind. Right. So now you're seeing that it's 5 billion now, but what Wall Street's thinking, guys, is that it's going to potentially be 7.8 billion. Now, what I would like to know, let me just kind of zoom out here so we can see. Sorry. Let's zoom out here. Oh, let's look at the net income. Again, I don't believe Wall Street. I think Wall Street's full of shit. But what Wall Street's thinking is they're going to continue being negative until 2027. But I would say they might be profitable next year. Who knows? We'll see. But I would say maybe 2027. We'll see. But again, it's tough. The goal is, when are they going to be profitable? And again, it's tough. What Wall Street sees is foreseeable future. It sees negativity. In fact, let's just go ahead and do kind of an weird outside analysis. Excellent. And I'm happy to show you, Marcus, that there's another way to look at stocks, that you can actually set your own price target, right, from the numbers. It's funny. This is how crazy this is. You take all these numbers, and without even looking at the stock price, I don't have to look at the stock price. I look at how much money the business makes, and from these numbers, it gives me a stock price. Isn't that powerful? And then later, after I calculate my own stock price based off of this data, I then look at the stock market, and then I see what it's trading at. If it's worth $5, but it's trading at 20, I pull the middle finger to Mr. Market. But if it's trading at $5, but it's worth $20, then I say, come to me, daddy, right? You're mine, right? So there's that, okay? Let's go ahead and look at the analysis. Yeah. So you got about 6 analysts covering this. And again, ours goes to 2028, right? The estimation. It goes to 2028. Yahoo Finance only gives you 2026. So you can see how we give you more data, right? Because normally Bloomberg costs about like $2,500 a month, about $25,000 a year, right? Ours is a one-time payment. It's ridiculous. So you can see for the foreseeable future, their thinking is still going to be negative. So, and they may be returning the growth in 2026. That's what they're thinking. So, and here's another one too. Let me go ahead and take a look at the analysts. Give me a moment. Let's look at another way of looking at analysts. Hold on, guys. This might change. You never know. This might change, but look, analysts are thinking this. So this might change. Analysts always change. They change after the stock price goes up, right? Again, I'm data driven. I'm not followed by emotion. But again, guys, I don't see a business turnaround from the fundamentals. Okay. Yeah, so that's about it. And it's unfortunate because what a lot of these retail investors are doing, not retail investors. Like for example, watch this. Yahoo Finance. Yahoo Finance says record 180% weekly gain. And all they're doing it for views so they can get likes. That's all they're doing it for. But no one's out there giving you the hard data, right? I'm showing the hard data, right? And yeah, people can insult me. People can call me names. That's fine, right? Because at the end of the day, what I am not is a liar. I am not a liar, right? And for the folks that are in lifetime access, I fight for you every single day, right? Just like what Jeff Bezos, I love what Jeff Bezos says. Customer service, the customer, it's all about you guys, right? When you join the platform, I want you to feel better than going into an American Express Centurion lounge. You understand what I'm saying? I want American Express to be like, man, we need to learn how to treat our customers better like Al Stock Trades. That's the type of, that's the goal that I aspire to, right? And we do that by sticking to rule number 1, which is always being honest and showing you how I get my data, how I think, right? Why I'm thinking the way I am, right? That's all. And when I give my opinion, I say, in my opinion. It's simple. That's all it is, guys. It's not rocket science. Okay? So God bless you all. Appreciate you. For folks out there that are looking for a place that's not full of shit, that's real in this fake world that we live in, we have a place for you. We have a place to break you out of the matrix. A lot of people are going to be retiring soon. It's going to be amazing. And I can't wait to enjoy with you in Turks and Caicos and maybe, Belize 2025. We might be in Belize by 2030. Who knows? Right? So let me go ahead and look at the comments real quick. We talked a little bit about it about 5-10 minutes ago about SoFi. Yeah, true. Lots of retail will still be buying due to hype and dump it. Yeah, absolutely. And again, in the long run, you will be caught holding the bag, and it's just not a good way, right? So that's it, guys. That's all I have for you. God bless you all. Enjoy your weekend, and stay safe out there, right? Always ask questions. Why? Why? Okay. I love you all. Have a wonderful Good Friday. God bless you all. Peace.